Hey guys, it's Walter here, and thanks for spending time here at the webinar. Today we're going to talk about options trading. Hello, welcome. So the way that I'd love to do this is we can talk about support and resistance. At the end of the webinar, we can look at the live charts if you'd like. You know, we can look at any charts or any questions you have on those. Okay. So if that sounds good, I think we'll get started. Thank you so much for spending time here. My name is Walter Peters. I'm a full-time naked trader. Good morning, Ramon. And I know some of you have read the book Naked Forex. Talks about some of the systems that I use. Probably my favorite chapter is the end when in the psychology bit, and I'm actually writing a book on now. So something that I think a lot about. I think it's really kind of the thing, you know, when you get into trading, we think it's all about the systems. And then as we get more advanced, we learn it's really about the risk management and our mindset. So I think most of you probably would agree with that, I'm guessing. At least from my point of view, I think most of you would. So let's talk about support and resistance. Now, we'll get back to this pound chart in a minute, but I'd love to hear a time frame and a chart that you would like to use. Does anyone here have a chart that you would like to use? We'll use your example when we go through this process. And then I'll show you kind of the mistakes, the things to look out for when you're using support and resistance in your trading, okay? And then, like I said, we'll go over the live charts. All right. So I'll start with a random. Pound yen. Okay, pound yen it is. And we're going to do daily pound yen. So if we're going to do daily pound yen, then I'm going to put the weekly up here. Look at those really tight weekly ranges. Something crazy is going to happen on the pound yen. Because normally the week, as you can see here, you know, historically when you go back and look, whenever there's several weeks that are really tight and then it usually just explodes. We've had some explosions, and now we've kind of tightened up here. I would expect that we would explode again at some stage. We'll definitely look at the pound, yeah. So what I'm going to do now is I'm going to show you how I draw my zones. Now, the easiest way I know how to do this is to go like this, guys. Once we get this, so just to be clear, I'm going to trade the pound yen daily chart. So what do? I put the pound yen weekly chart on. Likewise, if I was trading the pound yen 4-hour chart, I would put the pound yen daily chart on. So I'm just moving one time frame up, and then I go to this button here if you have MetaTrader, and this is my line charts. So I go blam, and I'm putting a support level at the lowest low that I can see on my chart. And there might be a lower one if I scroll back, but I'm just looking at what I see. Look at that. Look how it bounced right off that level. And it looks like I've got another one down here. And then I'm going to put my my resistance level at the highest. Just going to be right about there. And then obviously, I don't know how many of you have been trading for a while, but been trading for a while, then you remember the massive shoulder, head, and shoulder that the pound yen offered us years ago. Shoulder, head, shoulder. Broke the neckline, retouched the neckline, and then it was off to the races. Wow. That was a long time ago. What was that, 8 years ago, was it? 9 years ago? Yeah. Okay. Seems like yesterday. Anyway, let's keep going. So really what I'm doing here is I'm just drawing my zones at the highs and the lows of the chart. Okay, now the next thing I want to do is, and we will get to the pound for sure. because I did a video on the pound this morning, and I want to talk about what's changed since that video. Okay. So now what I'm doing is I'm just drawing these levels where we have support, support. Ideally, we'll have both support and resistance on these spots. So see how this level right here is resistance, and then this level right here is support. Support, resistance. That's what we're looking for. We want to kind of line it up so that it's both, right? We want to find both support and resistance here, ideally. Okay. Support, resistance. Same thing, right? We had resistance back here and the exact same spot where we once had support. Now, most of you probably get what's going on here, right? Most of you probably go, okay, I get it, Walter. That makes sense. The main thing here, though, the main mistake that people make when they're drawing their support and resistance zones is they try to do it on the time frame that they're trading. And I consider that a big mistake. I think that while there's nothing wrong with looking at the time frame you're trading and defining support and resistance on the time frame you're trading, it's much easier to first identify the support and resistance levels on a higher time frame. Because what we have this tendency as traders to draw too many support and resistance levels if we are looking at the time frame we're trading. And I know this because I get a lot of charts from students, and they'll send through charts and they'll go, well, what do you think? And I'm like, well, why is it that every single day of the week your Euro chart is hitting support resistance? The reason why is because you have too many, basically. You have too many. It shouldn't be an everyday occurrence that the market, hits a support or resistance level. So that's why there should be some candles in between these spots, right? Okay, is that clear to everyone? Everyone cool with that? You all good with that? Makes sense? I'm just gonna have a sip of my tea while I wait for questions to come through. The main thing is people draw too many zones. Now, having said that, sometimes what will happen is we miss out on a level because we're using a higher time frame, and that's okay. You can go in and draw it. So, like for example, right here, I noticed that I drew my weekly support and resistance levels, and I missed this one. Okay, fine. I'll go ahead and draw it in. And it might make sense to even draw it in as a different color. So I identified that that one is different to the blue ones that I drew on the weekly. So that's fine. But the point is here, I don't want to see every single day. I don't want to see the market hit my zones. It should be kind of a once in a while occurrence, not an everyday occurrence. Same thing here. You see us support. So I missed that one, so I'll draw that one in and so forth. So you get the idea. All right. So you're basically saying, okay, hold on, question here. So basically you're saying I don't need the current time frame support resistance levels. If I'm trading the 4-hour chart, so support resistance levels at the daily time frame only. What I'm saying is almost that. Almost that. What I'm saying is that the most common mistake when using support and resistance level on the chart is to draw too many. I rarely see a trader send me a chart where they've drawn too few. They're much more likely to draw too many. Okay, so if that's the case, one way to get away from that and draw only the very important ones is to go ahead and go to the higher time frame. So yeah, so in essence, I'm saying, yeah, we'll look at the Aussie too, Alexandru. Alexandria wants the Aussie, and Adityan wants the pound. We'll look at the cable and the Aussie both today, okay? Since we got some strong moves today. Yeah. As many of you know, I'm long the Aussie against the Kiwi at the moment, but we'll talk about that in a minute. All right, so yeah, so what I'm saying is it's easier for you to draw your zones in on the higher time frame because you're less likely to identify those minor zones. I talk about minor zones in the book Naked Forex, but the main point here is that we really want to get to the point where it's a special occurrence when the market hits the zone. Okay, now what we can do is we can stash this one away, and we'll go with the Aussie now, and then we'll go to the pound as well. So this is the Aussie weekly. And again, if I want to draw my support and resistance zones on my Aussie, what am I going to do? I'm going to go to the line chart. And I'm going to easily identify the high and the low. That's the easy bit. And then from there, I will look for the other spots where we see both support and resistance. That's what we're looking for here, right? Which time frame is best for support and resistance? Well, it's a good question. It's really the higher time frame. Any time frame higher than the one you're trading. So, for example, if I was trading the 1 hour chart and I wanted to trade support and resistance, there's no way I would trade off of what I see on the 1 hour chart. At a minimum, I would go to the 4 hour, and I'd probably just go to the daily. Most of the time, I'm trading 4 hour or daily charts. I rarely trade 1 hour charts, so I'm not really one of those. I'm not what you would, definitely not what you would call a scalper. But the important thing to keep in mind here is that you're always going to be better off, in my opinion, this is my opinion, drawing the zones on the higher time frame. You're almost always going to be better off drawing the zones on the higher time frame. Okay. And then you can see there's support down here. Always the low and the high are going to be there too, even though the low might not have any resistance there, but maybe one day it will. Same thing with the high. Maybe the high doesn't have any support there, but maybe one day it will. Okay, so that's basically it. So I'm just drawing these in like this on my weekly Aussie chart. Now I can go back to candlesticks or bar chart or whatever, and then I can zoom in on the daily and say, okay, well, you can do some little adjustments, which I like to do. Like if you see it and you go, well, I kind of missed this a bit, move it down here, something like that. Sometimes that you have to do that because in the higher time frame, it's not as clear. You're not really focused on your your lines aren't precise really. So you just need to, but that should get you most of it. And then once in a while, you'll see another one that makes sense. And if that one makes sense, like for example, in here, I probably would put one right here where we have support, resistance, support. You know what I mean? I would probably put one around here. The line chart will clear it up for me too. So yeah, there it is right there. Support, resistance, support, resistance, support. So there you go. So that's basically it. Does that make sense? I would always go with the higher time frame. Yes. I would like to know how you know the level will hold or break and continue. Very good question, Parrot. And that is the next step. That is the very next topic that we're going to talk about right now. Okay, so when we're talking about support and resistance mistakes, number one is the number one mistake is drawing too many. So what's the antidote? What's the antidote to drawing too many support and resistance zones? The antidote is to use higher time frame. Okay, So mistake number one, too many zones on your chart. If you're using support resistance, the antidote is to use the higher time frame. That will make it a special event when the market hits here. Look how many candles, you know, for example, on the Aussie, it hit the zone here, and then how many candles was it before it hit the zone again? It was 10 candles before it hit 10 or 11 candles. And then after it hit it here, how many candles before it hit it again? It was 9 candles later that it hit it. It should not be hitting your zone every single day. That's a very bad sign, right? Okay. Number two, and maybe we'll go to the pound now, because Parrot had a great question, which is how do you know when the market is going to break through a support and resistance level, or if it's going to respect it and bounce off of it? Well, I probably haven't said this in a long time, but if you're a long time FX streeter, or if you've just been to my webinars, you know that I talk about this idea of the beer belly. And what will sometimes happen is, like, if you're just, for example, let's say you're just, you know, you're at the beach and you're walking down the beach, and it's mean you trade on 4 hour. If you trade on the 4 hour, I would draw my zones on the daily. So all you really need is a MetaTrader account, right? And then you go, okay, I'm trading the 4 hour, so where do I draw my zones? On the daily. I'm trading the daily, so where do I draw my zones? On the weekly. I'm trading the weekly, so where do I draw my zones? On the monthly. I'm trading the 1 hour, so where do I draw my zones? On the 4 hour, and so forth, right? It's pretty, you just want to go to a higher time frame, the next one up. I'm going to get to that in a question. There's a really good question that just came through about fine-tuning your entry. We'll get to that in a moment. But that's a good question. I will file that away. Great question. Okay, so let's do this, guys. So here we have the pound weekly chart. Okay, I don't know about you, but it's been going down. Looks like it's been going down, down, down. All right, so now, and I know everyone's so excited that it's going up right now, but it's been going down. In fact, you could argue it's been going down for some time. And if it were to come back up and hit this trend line, we could sell it again. So it's a downer. Now, forget trend lines. We're not going to talk about trend lines today. We're going to talk about support resistance. So what do? I go to my line, my trusty line chart. I draw in my resistance at the high, support at the low, and then everything else in between. Boom, blammo, shebang, shawamo, gadzugo, gabaji, shawangi. We got them all. And chapow. Yes. And there's going to be one right there. Look at that one. Look how good that one lines up. It's amazing to me that the market hit this level right here, remembered it when it came back here and double topped. Okay. So it remembered it. Then it remembered it again when it hit it here 3 times. And then it broke higher. And then look, it found support. It's amazing to me that it has a memory like that, but it does. And we're all used to it. Okay. So now let's talk about is, you know, well, that's all great that you can draw the zones in, but how do you know what's going to happen when you get there? And my answer is what the Naked Forex book was all about, which was like, you know, has the market printed a repeatable, reliable pattern, a catalyst, so to speak, at the level? What did it do? What did the market do when it got to your support and resistance level? Did it give you a reliable pattern? There's a couple of clues I want to give you, and this is based on everything that happened today with the pound. It's actually a really great day to have this webinar. It's an excellent day to have this webinar because of what happened today with the pound. Okay, so I want to explain something. Number one is last week I started getting excited on the pound, and the reason why I started getting excited on the pound is because I said, look, guys, the pound is fast approaching this level of support. Now, on this chart, it's drawn at 24.30, but it doesn't really matter. You get the idea. Around 1.2430, around there. So really, that's what's going on. Okay. Okay. So I started getting excited, and if you watch my trade videos, you know that I was getting excited. I said, well, when it gets up to this level again, if it prints a bearish candle, we can get what's called a first touch trade. And I would be hot keen to take it. Right? That's something I would be keen to do. Sell off that touch there. Now, what happens next? We get closer, and then bam, yesterday we tagged it, right? Is it Japanese? No, I was just making it. You know, when you spend all day with little kids like I do, well, at least today I did, you start thinking funny. So I've been hanging out with a 3-year-old and a 1-year-old today, so I've been making weird noises all day. Okay. So this is basically where we know the market's repeatedly bounced off that, right? It did there, it did there, there. Couldn't get through it, right? So I said, well, if it gets back up here and prints a bearish candle, I would be happy to sell it. So that's what happened. It went up and then it hit it, and then yesterday it pulled back. Now there's one problem with this. Well, there's a couple, but and again, this gets to the answer of the question, which is, how do you know what the market's going to do when it hits a zone? It's all well and good that you can draw the zones in there, but what the heck is it going to do when it gets there? And the answer is by the pattern it prints when it gets to the support and resistance zone. Let me state that another way. The market will offer you clues one candle at a time when it reaches a support and resistance level. Those clues are telling you whether it wants to move sharply away from that zone or whether it wants to break through it and bust down the wall. Okay? That's really what's going on here every time the market gets to one of these support and resistance zones. And that's what's going on here. The market went up. It printed this bearish candle. However, if you follow my trades, you know that I loathe taking a trade on the daily or the weekly charts. I loathed entering on a Monday. Reason why is, historically, what we've noticed is that Mondays, the market will often go one way, only to completely reverse on Tuesday, Wednesday, Thursday. Now, Friday's a bit of a crapshoot. Sometimes Fridays it'll reverse again, and sometimes it'll just kind of go in the same direction it's been going all week and then kind of give it back a little bit in the last 2 hours of the week, basically. Which for me is 2 hours a week is, you know, from 3 p.m. to 5 p.m. New York time, right? So that's fairly typical. Okay, Fridays we don't really know, but it can give it back on Fridays too. But typically, the market will go one way on a Monday, which was down yesterday, and it will completely rock it up. And if you don't believe me, I'm going to pick again, go anything that anybody tells you, you should always take with a grain of salt. But no, I don't like these blue ones anymore. I'm going to go ahead and change the blue ones to white because I didn't realize colorblind people. Did you know that colorblind people, they don't even know what that chart was? They would see blue and red and they can't see blue and red, so they don't know what's going on, you know? I mean, you can work it out if you look at the candles and you go, well, that's a down candle, but it's just a little bit weird. So, like, you know, for example, this is a down candle, right? But the ones in the middle, it's a little bit weird for them. So that's why I'm using white and red now, so that the colorblind people can see. And there, you know, there's actually a lot of males out there who are colorblind. It's much more frequent in males. So let me just pull up a random candle here and just say, okay, well, when did the market make the low? Okay, so this week right here, okay? So let's go to the daily. Let's back it up. So this was the, okay. All right. So here you go. So this is the first, so this candle right here that went down, this candle went down right here. This is November 7th, 2016. This daily candle went down on the pound CAD. Okay? It was a bearish candle. Tuesday it went down too. And then, oh, lo and behold, Wednesday it rocketed up. Thursday it took off like a, and then Friday even further. Although again, it pulled back. So I'm willing to bet that it made this high during the New York session, and it gave that much back at the end of the day. I can almost guarantee you that's what happened with this little wick here. But anyway, the point is that that move that we saw down early in the week was completely obliterated the rest of the week. And that is not a rare occurrence. It happens a lot. It's not foolproof, but it happens a lot. And that's why I was a little bit wary of this bearish candle here. But I said this morning, if you watch my videos, I said, look, this is what I'm going to do. I'll wait till the London Open and we'll see. I'll put a little sell stop below this candle here, assuming that we're going to get a valid first touch entry. So I think this was at 48. Sorry, this was at 1.2334. So I said I'll sell at 1.2330. But guess what? Or below the Asian low. If the Asian session low was lower, I'd sell 4 or 5 pips below that, right? But it didn't. It didn't go lower during Asia, and it's gone up. And now you can see the market has gone higher than the high of this candle. So immediately I know this is no longer a sell trade here. This is a breakout. Well, I shouldn't say that, but depending on the close of this candle, it's probably going to be a breakout. And the reason why we say that is because we had a potential sell trade here. The market never triggered the sell entry level. I never even entered it into my platform because it went so hard the other way. And so my stop loss, so if this was a trade that was, that I took, I would have had my stop up here, okay? And I'll make this red, I'll make this orange. So it's, that would have been my stop level. That would have been my entry level. And it's already gone to where my stop level would have been without triggering the trade. So I mentioned this actually in the video. I wish I know some of you probably haven't seen it, but I said, look, there's a couple of things that are gonna ruin this trade. One is if the market goes really hard during the Asian session lower. That would be terrible, right? Because it'd probably reverse during Europe then. Two is if it went really hard toward the stop level, which it did. and anything else would probably be okay. If like it just kind of sat here or went slightly lower or a little bit higher, that would have been great because it probably would have triggered the trade during the London session, but it didn't. It went the other way. So now what I'm looking for here is a breakout, and this is what it would look like. So again, the way that we know that the market's going to break through this level is the way it's behaving. It went right, it rammed right up into it. It pulled back once, and now it's gone hard again. So this is one principle that people don't look at. I don't know why they don't look at this, but they don't look at this when they're trading support and resistance, which is this. Quick touches, many touches in quick succession. What that means is if the market is going to break through a level, what does it usually do? Well, I'll tell you, it usually doesn't double top. It usually doesn't tap it, move away, come back, tap it again, and then move away for a long time. In other words, a double top or a double bottom. What it normally does is it will tap it and then immediately tap it again, and then tap it again, and tap it again, and then finally it'll break. And that's exactly what's going on in the pound yen. Let me show you that pound yen chart that we had. Do you guys remember this one? This right here, and I know it doesn't look like it right now, okay, that's fine. But see all these touches right here on the support level? That's a red flag to me, and that's a sign that I believe that it's likely to break through this support level and fall. And I tell you what, if the pound yen falls below this level, it's going to fall hard. So this is definitely one to keep an eye on. This whole pattern of a trend line against a support level is just a huge breakout to me. But anyway, so that's the pound yen. So let's get back to the pound. So the second problem that people make when they trade support and resistance is they just assume that the market is going to hit that level and bounce right off of it. Well, that's not always the case. And there are a couple of clues that you can look for. One is, do you have a reversal signal on that support and resistance level and it gets completely obliterated? Well, like exhibit A. This right here, up until this point, this was a pretty good sign that the market was going to hit this and move away. See how the line chart bended downward right here? It could have had a sharper turn, sure. If it closed lower or whatever, it would have had an even sharper bend. But this is a pretty good, like see how sharp that one is? It's a pretty good sign that it's going to bounce off of that. Okay, so that's why I was thinking, okay, maybe we'll have a sell trade here today. Well, we didn't because it did this. So immediately now we know. Now, again, this candle hasn't closed yet. New York hasn't had their say yet. But when New York comes in, if they can keep this up right up against this zone or above it even, this is a breakout trade. So how do I trade it? I wait for it to spend several candles up here, come back down and give a nice bullish bounce, and I get in on the bounce. All right. So when we're trading support and resistance, if it touches it and moves away quickly, it's probably respecting the zone. If it touches it and then touches it and then touches it and touches it and keeps doing that, it's probably going to break. Kind of like what happened here. Look, it kept hitting it. It only spent, like, if you're going to look at all here, let's do this. How many candles sat on the support and resistance level, on the support level here, before the market broke through? Okay, 1, 2. Okay, then these two it didn't. So 3 out of 5, 3 out of 6, 4 out of 7, 5 out of 8, 6 out of 9, 7 out of 10, 8 out of 11, 9 out of 12, 10 out of 13. I mean, all these candles are just sitting on that zone, keep touching that zone. Even if they wick into it, that's a sign that the market wants to break through, and that's exactly what happens. So that's a huge clue right there. The other thing is you can use the week, the pattern of the week that I was talking about. If you go right up against the support and resistance level and you see the market pull back on a Monday, be very scared. Be wary. Don't trust that. I don't care how bearish that candle is or how bullish that candle is. You wait until see what happens on Tuesday and Wednesday, because you'll see it. And which brings me to another point. Just having more candles and more information about how the market is reacting against that zone gives you a huge advantage. Because just waiting that one extra candle will say, okay, it gives you one more bit of information that you can process. So does that make sense? Does everyone see why that's the case? If you get multiple touches in succession, it doesn't always mean it's going to break out, but it often means, like, look at this. Market came down. So here's an example of both, okay? Let's talk about these two, actually. This is a really good. So here's 1. So we'll talk about 1 right there, and then we'll talk about 2 right here, okay? Let's compare these two. So when the market came up here and hit the zone right here, 1 candle hit the zone, the next candle moved away. So what does that look like on the line chart? Well, it looks like a huge bend. Whoops, sorry. Got to get it right. You can hit the F12 key actually on your keyboard, and it'll advance 1 candle at a time on MetaTrader. So that right there, number 1, we hit it and then we pulled right away. That's a pretty good sign that you're going to move away from the zone, right? Now, it could have come back up and double top, but it didn't, like it did here, but it didn't. Okay, so then we move down here and we hit it. Now, are we going to double bottom here? Are we going to bounce higher? 2 out of 2 candles are sitting right on the zone. 3 out of 3 candles are sitting right on the zone. 4 out of 4 candles are sitting right on the zone. And finally, 5 out of 5, and then we gap lower. So it broke through the zone, right? You can see that even though these closes were unable to close on the other side of the zone, this one did, right? So that's a good now. I know it hopped back up and it was a, it was like a false breakout or whatever. Yeah, that's true. But the point I'm trying to make here is that the candle behavior tells you a whole lot. Another thing is, actually, this one right here is a really good one too. See how the market printed a really bullish candle and then it pulled back right at sort of at the top of that candle? When you see the market run a really bullish candle up against a zone and then it prints a lot of little tiny candles up at the top of that candle, that's a pretty good sign that it's going to break through. And the Aussie Kiwi did that recently too. And I went long the Aussie Kiwi. It's basically around the entry price, but it's a daily chart trade, and we'll see how we go. But that sort of pattern is one I've done a lot of testing on, where you get a really strong, long bullish candle, and then you get a little pullback candle. Sometimes it's inside of the candle. Sometimes it just has a slightly higher high and it sits up there right up at the high. Sometimes you get a few of those sitting there, and that's usually trend continuation. So that's one to watch out for. And that was obviously the case here. What's your reason for drawing the support and resistance on a higher time frame? Because it's a more important level. So for example, if I see that, if I see where it says 1 right here on my chart, on this daily chart, and it ran into it and then it fell away from it, on the 1 hour chart, you might see like a double top here, or the 4 hour chart, you might see a double top here. You know what I mean? It's not just a one strong touch. And the second reason is I want more people seeing the zone than just me. So if I was drawing a zone on the 5-minute chart, it could easily break through that. It's not really that important. It could reverse off of it, but it could easily break through it. It's not that important a level. But if I'm trending a zone that I see on the weekly, the daily, the 4 hour, and the 1 hour, then I know that all those traders are seeing the same thing. All the traders that trade the weekly, all the traders that trade the daily, the 4 hour, the 2 hour, the 30-minute, they're all seeing the same thing I am. So I want as few zones as possible. I want the most important ones that are going to show up on all time frames, and I want as many traders seeing what I see as I can. And the easiest way to do that is to just trade the higher time frames. Cool. All right. All right. So number one, we talked about it. Number one mistake that traders make is they draw too many zones, and the way around that is to use the line chart and use a higher time frame. The number two mistake that many traders make is they don't pay attention to what the candles do when it gets there. And really the easiest way to see this is to look for where the market touches the zone and then quickly moves away, okay, which is going to translate into a sharp line on the line chart. Now, this is by no means foolproof, but compare the times when the market hits the zone and sharply moves away versus the times when it just kind of sits there and flat lines, like it did here, just flat lines and then broke through. So let's see if we can put this in action. Let's go. Okay, so let's go with the euro. Okay. All right. You know what I want to do is I want to get a clean chart here. Let's do this. I'm going to go euro, okay? Unless anyone wants to do a different, if you want to do a different one, but I want to go euro. The last mistake I want to talk about is this idea of not being patient, not waiting for more candles to give you information. Because what you can often do, guys, and don't take my word for this. Don't take my word. Test this yourself. But what you can often do is you can often find that by waiting another candle, you get a much better trade. Just giving yourself a little bit more time enables you to have a much better situation. And I'll show you what I mean in just a moment. Okay? Here. Okay. Okay. All right, cool. All right, so all right. So here we are on the euro, and this is what I would say. We're fast approaching this zone right here on the euro, which is at, I don't know, what is it at? 108.15, okay? Now, when it gets to 108.15, I want you guys to pay attention. So this is the 1 hour euro chart. I want you to pay attention to this. And even if it's tomorrow when you wake up or whatever, what did it do when it got there? Okay. Did it hit it, push off of it really sharply with a really sharp move? Or did it kind of hit it and just flatline and sit there for a long time? Right? Did it hit it with a really strong bullish candle and then the next candle was a little tiny inside candle or almost inside candle right up at the top of the high of that bullish candle? You know what I mean? What did it do when it got there? Because that's going to tell you the clue. That's the clue. That's going to tell you what's going on here. It's really it's so critical. And then the next thing is, let's say that it breaks through this level, okay? Where do I put my buy order if I want to get it? Let's say I think the euro is going to go on an uptrend, and it might. Do I put my buy order up here just because it's way above the zone? And so if it clicks in, I know that it's going to go up? No, what I would do typically is wait for it to spend several candles up here in this area, spend some time up there, then fall back down, then retrace, and then give a bullish bounce off of this level. So a nice big fat bullish candle that's really strong that says, buy me, buy me. So a candle that could look like this kangaroo tail, which is bullish, that's a bullish candle, or even like this big fat bullish candle right here after the kangaroo tail, something like that up at this level. So it's got to hit it, it's got to break it, spend time outside above the zone, pull back, and then bam. Same thing with the pound. What can the pound do? Well, here's what it could, this would be really beautiful if it did this. If the pound could spend some candles up here, pull back, bounce off that level, and run for the hills. So that's the third mistake that a lot of traders make when they're trading support and resistance, is they don't wait for the pullback. They don't wait for the extra candles. They don't wait for more information to tell them whether or not they're on the right track. And if you use buy stops for your buy trades and sell stops for your sell trades, you're forcing the market to come to you. You're forcing the market to say, yeah, I do want to go higher, instead of getting in on a retracement. Of course, getting in on a retracement is going to reduce your risk, right? Of course, you're going to have a much higher reward to risk ratio if you get in a retracement. But you know what also you're going to have? A lot of losers. You can have a whole lot of losers. And I don't know about you. Most traders I know freak out when they get too many losers. I don't know any trader that's able, well, I should rephrase. I do know a few, but the average cookie cutter trader wants to win and has a hard time, getting blasted. So does this apply to oil and gold? Yes. Can you use support and resistance levels using limit orders to ensure better risk reward? After confirmation, you need a big stop. I just talked about that parrot. Yeah. So here's the thing. You can always get in on a retracement for a better reward to risk ratio. But remember what happens here. Okay. Let's say that I think the pound's going to go up. Okay. All right. Well, actually, no. Let's talk about the trade that I was looking at earlier today. So we had this potential first touch trade today. Okay. Now, I said after the Asian session, I'm going to put an order in here below the low of this bearish looking candle. And if it triggers that, then I'm in. I'm going to sell trade. I'm going to sell all the way down to either these highs or this zone down here. Okay. That was my trade. You can go back and look at my, I posted the video this morning when the Asian session opened. Okay. That was my plan. However, I said there are two things that could foil that plan. One would be if during Asia, it just completely fell off the cliff and just kept going lower and lower and lower. Because then I would not take the trade. I don't want to get in and see it rebound and reverse during Europe or whatever. So that would number one. And the number two thing that could foil my trade is if it went toward and approached and got really close to my stop loss level before it ever triggered the trade, before I ever put it in the platform. And that's exactly what it did today. So of course I could get in on a retracement, but I would have been stopped out, right? So could I have gotten in on a 50% retracement of this candle? Yep. And I would have been stopped out. Could I got in on a 38.2% retracement of this candle? Yep, I could have, and I would have been stopped out. And I also could have got in on a 61.8 and a 78 Gartley and blah, 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 and everything else, and I also would have been stopped out. because every losing trade is a retracement trade first. How's that for a quote? Every losing trade was a really, really good retracement entry first, right? There are no exceptions. Every losing trade first had a whole string of brilliant looking retracement entries, okay? However, now I can still get a loser if I get triggered down here, if I wait for the market to come to me on a sell stop. However, my chances of winning go way up. And again, don't take my word for it. Test this on your own. My chances of winning go way up if I wait for the market to come to me. So as far as the pound is concerned, what I would be looking for here is potentially like a 4-hour or a daily bounce off this level here. And again, I've got it drawn at 1.2430, okay? I consider this to be in a minor uptrend now. And if it keeps going up, I think it will pull back, bounce off this level, and possibly offer a really good entry. Does that make sense? Cool. All right. Any other charts? So I'm in the Aussie Kiwi. This is a bullish. So basically, this is what we were talking about before, guys. I was talking about, see how the market printed this bullish candle, and then see how it printed these little tiny candles right up at the top of that bullish candle. Well, that was a sign that I wanted to get in. So I did get in. I actually got in on this little white candle after the market did a big bullish move and then sat there, basically. Now it exploded and it's pulled back here, but it's early in the week. I would expect at some stage this week it's going to have another move up and it's going to trade higher. That's what I would expect. The other ones that I like are the Euro Pound. Well, maybe not. I was looking for the Euro Pound to get out of this trend line, come back down and bounce off of it, but it's not going to do that. So no, not the Euro Pound. What about the EURCAD? The EURCAD was another interesting one. If you guys have any charts that you want to see, here we go. Here's EURCAD. So EURCAD is a breakout above this trend line. It's already done that. You know, ideally, it would also break this support and resistance level, trade up here, come back down, bounce off of that, and I will go long. The nice thing about this is that if you back it up, we have this zone that's way, way, way up here at 4650, 1.4650. You could even just go at 46, but that's really far away. So again, I'm a little bit leery of this one just because I really would like to see it break above this level before I go long. So I'll probably wait for it to spend time up here and then pull back and bounce off this. And this is the 1.4410 level, right? So that's it, guys. That's all I got for you. Yeah, Cedric, this is oil, gold, all this stuff. Support resistance is, you're always going to see it. Yeah. I know gold has kind of a different opening and closing time, but yeah. I hope I got everyone's question. I know there's a lot of questions in there. I hope that I was able to get all your questions. Thanks so much for your... Oh, okay. Let me just talk about one thing here. If we have time, I'd love to talk about this last thing here. Currently, I'm trading the pound 4-hour chart. I'm drawing the support resistance at daily and weekly with a line chart thanks to your advice. But I also draw support resistance at the 4-hour or even lower as a fine-tune my entry. Okay, here's what I would say. Yes, you can fine-tune your entry on the lower time frame levels. However, I wouldn't use those minor support resistance levels as targets. Okay? You can fine-tune your entry. You can move your stop to break even. You can do all that stuff with those minor levels, but don't get sucked into using them as support as targets, because then you're gonna ruin your reward to risk ratio, right? So that's the main thing. I don't use the 0-0 levels as support and resistance. I mean, I understand why people do that, but I don't do that. All right, guys, thank you so much. We're bang out of time. I hope that you have a wonderful week. I hope this has been helpful. I will see you at the next Naked Forex webinar. I think it's on Thursday. Thanks, guys. So in 2 days. Thanks a lot. See ya. Bye.